The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Hello and welcome to Squawk Box. Here are your headlines today. Passing the torch, an emotional President Joe Biden highlights leadership and legacy at the Democratic National Convention's opening night, urging Americans to elect Kamala Harris.
They'll continue to lead America forward, creating more jobs, standing up for workers, growing the economy, lower the cost to American families so they just have a little more breathing room.
The S&P 500 clocks a rare 8-day winning streak, with the momentum pushing Wall Street within striking distance of fresh record highs.
A new Labour report reveals cracks ahead of a closely watched speech from Fed Chair Jerome Powell this week, while Goldman's chief economist says slowdown fears are overblown.
If the data support 50, they should do 50, and I think they will do 50. But I think it's much more likely that things will look good enough for a series of 25 basis point cuts to do the job.
The U.S. upping the pressure on Hamas after Secretary of State Antony Blinken says Israel has accepted a bridging proposal in ceasefire talks.
There is, I think, a real sense of urgency here across the region on the need to get this over the finish line and to do it as soon as possible. The United States is deeply committed to getting this job done, to getting it done now.
A big dose of politics for markets this week, so let's get into the weeds as Vice President Kamala Harris delivered a surprise speech on the first day of the Democratic National Convention in Chicago, taking to the stage to rally supporters and pay tribute to President Joe Biden.
Joe, thank you for your historic leadership, for your lifetime of service to our nation, and for all you will continue to do. We are forever grateful to you. With optimism, hope, and faith, so guided by our love of country, knowing we all have so much more in common than what separates us, let us fight for the ideals we hold dear, and let us always remember, when we fight, we win.
The Harris campaign says the vice president is backing a proposal originally put forward by President Biden to raise the U.S. corporate tax rate from 21 to 28%. The proposal would make the country's corporate tax rate one of the highest among advanced economies, but a Harris spokesperson said it would put money back in the pockets of working people. The DNC's first day was headlined by President Biden, who appeared emotional as he took to the stage after speeches from his wife and daughter. Biden used his address to criticize Donald Trump and throw his support behind Harris and vice presidential nominee Tim Walz.
They'll continue to lead America forward, creating more jobs, standing up for workers, growing the economy, lower the cost to American families so they just have a little more breathing room. We've made incredible progress, but we have more work to do. And Kamala and Tim will continue to take on corporate greed and bring down cost of food.
Former Secretary of State and 2016 presidential candidate Hillary Clinton also spoke on the convention's first day, comparing Trump's campaign against her with his attacks on Harris.
It is no surprise, is it, that he is lying about Kamala's record. He's mocking her name and her laugh. Sounds familiar. But we have him on the run now. We're not just electing a president, we're uplifting our nation. We're opening the promise of America wide enough for everyone. Together, we put a lot of cracks in the highest, hardest glass ceiling.
Andrea Gillespie joins us now, Associate Professor of Political Science, Emory University. Thank you so much for joining us today. I want to get into just some of the staging here because we were expecting to hear from Kamala Harris later in the week. Her acceptance speech is due Thursday, but she broke ranks and was on stage early on as we saw President Biden on stage and then Clinton. But first up to Kamala Harris. What do you make of the impact this has? Because it felt as though the Republicans waited for the course of the week to transpire before Donald Trump took the stage at the Republican convention.
I think I would disagree with that. He, made an appearance and was in the audience every night. And, his appearance, especially with that ear bandage, was certainly something that rallied the troops and rallied the crowd. So I think Vice President Harris was trying to do the same. I think she also wanted to express her gratitude personally to Joe Biden. I think, there are a lot of people and there's been a lot of media speculation about how the Bidens are still pretty hurt by the way that President Biden was encouraged to drop out of the race. And so tonight was a show of unity. And one of the ways to emphasize that unity would be to have Kamala Harris and Joe Biden standing side by side each other. And so to see that happen, to see the Bidens and Vice President Harris and Doug Emhoff on stage with President Biden after his speech was a show of unity. And it allowed President Biden to have the moment that I think he had always dreamed he would have on Thursday night, that he was now going to have in a swan song at the beginning of the convention.
Andrea, let me ask you about the deficit, because the markets are concerned that we're now coming up against some sort of wall in terms of the fiscal position stateside. And Kamala Harris's move here to also raise the corporate tax to 28% from 21% if she wins office. This suggests that it could be potentially part of a prudent policy to tackle the fiscal position. Trump also promising the same, but there are question marks as to whether his policy allows that. How important is the budget deficit when it comes to the US population as they cast their vote?
I think that there are some voters who are fiscally conservative and who are concerned about budget spending. It's a really interesting period in American history where Republicans don't necessarily own that issue in the same way that they may have once owned it, in part because we could look at the ways that the federal deficit ballooned under Donald Trump's presidency. The same thing happened under George W. Bush as well. Vice President Harris certainly got some criticism for some of the economic policies that she put forward in a speech last week. And there were some people who were arguing from an economic standpoint that some of her policies were actually probably deleterious to the U.S. economy. One of the attacks that could be made is whether or not there would actually increase the deficit spending. I heard some of her campaign surrogates saying, well, she was going to spend in other places and that would offset the Trump tax cuts, which she wants to reverse. And so it would basically come out even. This might be another way for them to say that not only are we going to come out even by reversing the Trump tax cuts, but by increasing the corporate tax rate, we're actually also now trying to cut deficit spending as well. So I'll wait to see what her campaign surrogates say, kind of in response to these reports.
Is there a risk, though, that Harris starts to look business unfriendly? Because we've heard comments in recent days around price gouging, but this move around corporate tax, typically the view is lower taxes the better when it comes to corporates because there's more ability to invest and hire workers. So is there a risk that the policies start to look unbusiness friendly?
Well, she's trying to make a populist appeal. I think that's the same reason she made the price gouging emphasis in her economic speech last week. And I think Joe Biden actually emphasized it in his own speech today, where he was talking, about the effective tax rate for billionaires versus regular people, and pointing out that billionaires in particular, and I should point out here that I think he's banking that people don't make the distinction between businesses and rich people themselves, pay an effectively lower tax rate than most Americans do. And so I think by talking about things that are redistributive, she's trying to say that she's standing up for the everyday person and that she's actually addressing kitchen table issues and trying to draw a contrast with Donald Trump, who Democrats are trying to paint as a corporate fat cat.
Andrew, good morning to you. I mean, is this where the support that spurred on the kind of financial gains and backing that Harris got as she kicked into gear for this election, is this where it kind of wanes a little bit when it comes up to the policy front? Is this where you begin to see fractures in how much you can raise?
No, I mean, her ability to be able to raise so much money so quickly was due in part to the fact that there were big Democratic donors who were withholding funds from Democratic candidates in an attempt to try to push Joe Biden out of the race. So as long as they are satisfied with Harris as an alternative to Joe Biden and someone who is in a better position to beat Donald Trump, I would expect that she will still be able to, be able to raise money. If she has a major gaffe or a major misstep in her campaign, that causes her to lose momentum and causes her campaign workers to become less enthusiastic about getting out the vote and for voters to become less enthusiastic about turning out to vote for her. That's when I think that you'll start to see her fundraising wane.
Yeah, and I mean, then there must be further vulnerabilities, surely at this stage, though, for them. 80 days out from this election, what do you think are the biggest vulnerabilities for not just Kamala Harris, but also for Walz himself as well?
Well, I mean, so these candidates are still largely undefined. And so what we've seen is that Donald Trump and J.D. Vance are trying to find the best way to define these candidates before they get a chance to define themselves, hoping that a negative image of them takes root and that will allow them to regain their footing in this particular race. So I think becomes a question of, does Harris make a misstep? Are the charges that her policies are too vague and she's running on emotion, do they eventually sort of resonate with voters and then stick, particularly with independent voters who might still be undecided in the race. Ultimately, this race is a base turnout election. It was when Joe Biden was the candidate. It still is with Kamala Harris as the top of the ticket. So both sides have to get their constituents out to vote. But in those swing states where the election could be decided by a few 10,000 votes, trying to persuade some voters that you're trustworthy and that you care about issues in the same way that these voters care about is something that's really important. And this is where issues of being vague or being temperamentally unfit for office could actually be decisive.
Arguably the most, influential Democrats are now set to take the stage. What is the anticipation then out of the Obamas today?
I think they're going to continue the message of unity. And I think that they're going to try to, make the case that Kamala Harris is best suited to beat Donald Trump. And I think that they are going to reinforce some of the themes that we heard tonight about why Donald Trump is temperamentally unfit to run for office and about how this race is still about the existential crisis of American democracy and whether or not our institutions are weakening. So I think they're going to say that in their own way. And I think, we've known historically that Bill Clinton has often been known as being expert at explaining things to people. I expect that he's going to share that distinction with Barack Obama tomorrow. And so we're going to see how they articulate a vision and whether or not it's said in such a simplistic way that it actually resonates with Democrats to the point that they start repeating those talking points.
Andra, there is some reporting already that this is a comparison to Barack Obama back in 2008. There's some momentum that Harris has at this stage. Do you agree, or do you think there are big differences?
Well, I mean, it's hard to ignore the shift in momentum that people are feeling kind of intuitively, and then also that people have seen in terms of fundraising and in terms of the number of volunteers that Vice President Harris has been able to recruit in the last month. So if we look at public opinion polling, we have seen that Democrats have caught up with Republicans in terms of self-reported enthusiasm for the race, and that could be a harbinger for voter turnout later. We've seen an uptick in the number of volunteers for the campaign. If those are harnessed effectively, those people can then go out and recruit people to turn out and vote in an effective way. And certainly we have seen the enthusiasm as represented in fundraising that Kamala Harris was able to secure and using that to be able to sort of, clear the field and to have a clear path towards the Democratic nomination.
Andra, thank you so much for joining us today. We do appreciate your expertise on this. Andra Gillespie with us, Associate Professor of Political Science, Emory University. And you can catch up with all the action from Chicago over our live blog on CNBC.com.
Now, former President Donald Trump said he would offer Tesla CEO Elon Musk a cabinet or even advisory role if he wins a second term. Speaking to Reuters, Trump also said he would consider scrapping a tax credit for certain new electric vehicles, a move that could affect Tesla's business. Now, Musk appeared to respond to the offer overnight, sharing an image showing himself behind a podium labeled with Department for Government Efficiency, an apparent reference to the Doge meme. Now, Trump's comments came after a campaign event in the key swing state of Pennsylvania, where he repeated his criticism of Kamala Harris's economic record.
Very simply, Kamala Harris is an economy wrecker and a country destroyer. Our country will be destroyed if she gets in. Her radical liberal agenda ruined San Francisco. It ruined California when she was the Attorney General. It crushed our middle class, demolished our border, set the world on fire, and now she wants to be promoted to the job killer in chief. But much more than job killer, everything else is going to go bad.
Coming up on the show, the PBOC leaves benchmark rates unchanged after a surprise move in July. We'll have more on the expectations for the Chinese economy this hour. Plus, US Secretary of State Antony Blinken touts a potential development in ceasefire negotiations between Israel and Hamas. We'll bring you the latest. And Sweden's Riksbank will unveil its latest rate decision at 9:30 CET. We'll speak to the SEB chief economist right after.
CNBC Connect is back in Bangkok, Thailand. Join the world's top entrepreneurs and C-suite executives for an invite-only leadership retreat. On the agenda, powering innovation and growth in Asia. Is AI transforming industries and creating opportunities? And get insights on building sustainable and resilient businesses. Be part of Managing Asia Live. Network and join an interactive brainstorm session. CNBC Connect, powering innovation and growth in Asia on September 4. Register now.
So before this, ultimately, we had seen a few benign moves. Friday was one of those benign ones as we headed into this week, which is going to be quite pivotal, right? You don't necessarily have the biggest data releases like you had last week, where you had retail sales, CPI numbers, of course, a bit of jobs numbers as well, scattered in there, whether it be UK or the US. So you won't have that kind of data, but you're going to still have some important numbers to really cross the wires. And of course, the most important factor being, of course, Jackson Hole Symposium from the Fed. But one thing is for sure, these markets are moving on the assumption then that you are going to see these rate cuts actually come through stateside. The question is just how much of that is going to be in play. Recessionary fears seem to have been pulled back quite considerably then, and you're seeing this market still rally higher. A lot more of the tech names finding some gains. So much so, in fact, that the S&P 500 and the Nasdaq are all on an 8-day winning streak then. That's a significant upward momentous move. And this is pretty much what you're seeing across that 8 days. Let's remember that earlier this month, we had been questioning whether we'd get any sort of move like this, whether that rotation into some of the other stocks was still in play. We're going to unpack that because there is still a bit of that rotation. Just a question mark around how much of it is still in play. 0.5% higher as well for the Dow Jones Industrial. What did all this mean then for the treasuries in yesterday's market picture? Well, there is still a bit of a wait and see effect that's still in play in this market, of course, because we're still waiting for that speech then by Fed Chair Jerome Powell at Jackson Hole, amongst other things. Then the 10-year note still pretty much at 3.88. Not really too much movement on that one, while you can see a pretty flat stance as well for the 2-year note as well. Still about 4%. 4.06 there as well, with near 18 basis points differential as well on the back of both of those treasuries then. Onto the dollar crosses here. The dollar is hanging near 7-month low. This is particularly on wages that the Fed indeed will cut interest rates when it comes to its next meeting in September. There is a lot of data still to come into play then before that, including another jobs report. So what will that mean ahead of that picture? If it does begin to disappoint a little bit more, will it really skew the data a little bit? The dollar weakness lifted the euro as well, then to pretty much what was its highest level this year. Sterling's also perched near a 1-month high of 129.79. In fact, 129.95 was the mark it reached around a month ago then. So still just shy of that mark right now. So you're seeing just an inch of sterling as well as euro weakness so far this morning. Dollar strength coming through just above 147 then for dollar yen. Onto the Asian market picture here, then markets mostly higher, tracking what we saw out of Wall Street yesterday, where you saw the Nasdaq even gaining 1.3% there. Major bourses pretty much trading in green there. China releasing some key economic data, of course. As expected, the loan prime rates pretty much held then at 3.35% for the 1 year, 3.85% then for the 5 year. The Nikkei with a jump as technology stocks are pushing that one higher, more than 2% to the good there. but a big 1% drawdown, though, for the market out of China. Unpack all of this a little bit later on as well in the show, Karen.
Arabile, a lot of fast-moving pieces on the economy, and CNBC has been keeping up the conversations with some of the top economists. Goldman Sachs chief economist and head of global investment research, Jan Hatzius, outlined his expectations for rate cuts this year.
I don't think he's going to let himself be, nailed down in one way or the other. I think if the data support 50, they should do 50, and I think they will do 50. But I think it's much more likely that things will look good enough for a series of 25 basis point cuts to do the job.
The number of Americans expecting to lose their job in the next 4 months has hit a record high. That's according to data from the New York Fed. The central bank's survey of consumer expectations shows 4.4% of those polled expect to be out of a job in coming months. However, it also showed that more than 22% of respondents expect to get at least one job offer by the end of the year. That is up from a year ago. We did hear from a very interesting speaker in the last 24 hours or so, and that is Charles Evans, former Fed speaker. And of course, he used to be somewhat of a dove, but effectively he was looking at some of the commentary, and that is that we're expecting to see effectively very, very positive outcome when it comes to the economy. And, here's the central scenario, according to some. The labour market is normalising. This is from what Powell's saying. Wage growth is easing. Job openings still healthy. Unemployment is effectively what policymakers see as consistent with the central bank's 2% target. And Evans saying, well, that would be great if that's all there. The history, though, is not good. And effectively he's saying that if you wait, you tend to have to need more aggressive adjustment because that unemployment rate could move higher, and you see a couple of bad employment reports and suddenly you're aggressively into a cutting cycle. I think that was one of those growth scares that we had the other week, that perhaps the Fed had missed some of the signals. And since then, the data has suggested that, yes, the Fed may be spot on, its soft landing is intact. But this what if from Evans, I think that perhaps you're a couple of report cards away from a change in that sentiment, was very interesting commentary.
Yeah. So how, if the jobs numbers was what got us to that point in some ways, right? Will it be again the jobs numbers that will ultimately ease a lot more of the tension? Yes, it's been eased by a lot of the data that we have gotten since then, whether it be the consumer still relatively strong out in the US, whether it be just CPI itself ultimately easing off to that 2% handle, 2.9% at present then. But if you were to get another jobs report and another jobs number that perhaps spooks the market again, would that cement or entrench a little bit more of the fears that we have around a recession in play? Or does the other market data then kind of intrinsically mold itself into this, and now you're not sure what exactly is going to happen?
I think what we're highlighting here is this is the reason why the markets are keeping for 1 percentage point cut from the Fed intact for this year. So we've got a view now that September is unlikely to deliver a 50 basis point reduction, only 25 basis points. And the rest of us are trying to work out, well, how do we get to the full 1 percentage cut then? And the view is, well, we could still be a couple of employment reports away from needing an aggressive move. So hence the reason it's still on the table. And it may stay on the table for a bit until we get confirmation in the evidence. What's interesting about this week for me is that some number crunching, DataTrek put this one forward, saying that typically you get a 2% move on markets or rally on markets on either side of Jackson Hole. The question is whether we're seeing this 2% unfold before Jackson Hole, before Fed Chair Jerome Powell speaks, and do we get a fade on the back of it? Because at this stage it looks like it was a one-way direction up for some trades on the market since that market rout.
And that's literally why you're getting that 8-day win streak. I mean, it doesn't happen very often.
10 for the DAX, isn't it?
Exactly, right? So it doesn't happen very often here. And this is just very interesting. Just the data that the team has actually been able to put together, this comes through from one of our US colleagues as well, then saying 93% of S&P 500 companies were up during this current rally. So over the last 8 days, this is really just that spark of that rotation that we'd actually been speaking about, right? Asking the question whether, is it actually still in play? Because the mega caps are still going up. As you said, the NASDAQ is still up for 10 days as well. So it still does show that there is still that mega cap influence, but it's broadening. The S&P 500 is not just about 7 companies anymore. It really is about the other 493, right? 36 stocks lower amid recent gains. So only 36. Meaning that it still shows that there's a broadening out of the cycle. And as we had noted, the 8-day winning streak only happened in 2004, 2013, 2017, and once every other year from 2019.
The reality is, if you look at yesterday's trade, there was one stock on the move, and that was McDonald's. Typically not a stock you would necessarily buy if you're seeing some concerns around the bifurcation of the consumer. And there was some concerns earlier this year when we saw that 12% drop in net income over 23 to 24 levels in June. And the change that we're seeing in management is that they've now introduced this $5 meal where you effectively get a couple of bits of protein, if you can call it that, some sides and a drink for $5. And that's
just say bits of protein.
that's expected to target the low-end customer who's been cutting back, so they get some form of a happy meal for that price. And so there is a view now that you've got the market looking at specific execution and management strategies, which is where you're getting the breadth in these stocks. So it's a bit like, would you like McDonald's? And you can have Nvidia on the side, because that was a stock that everybody's still throwing in the basket with a couple of other companies out there in the markets.
I don't think I've ever been more interested in a stock, a makeup stock, like Estee Lauder before.
Right.
I don't know why.
Right.
But I've been just poring over the numbers for it.
You're segueing over to another company.
I am,
right?
right?
Okay.
This is it's so surprising, because this is this company that has actually fallen off in terms of its share price, right? And the big worry had been whether it would be able to actually pick itself up from here then. And it manages to beat on the top and on the bottom line then. And along with the CEO's retirement, it's trying to unravel itself from where it has been. And let's remember that not so long ago we had Warren Buffett say actually Ulta Beauty is going to be the one to really look out for. Just look at that over a 12-month basis.
So you're sounding like a fund manager
down
here. So this is what's happening now. Single name exposures, people are looking at a lot more instead of a basket. And don't forget, the last 12 months or so, people were saying they wanted to buy cosmetics and they were buying baskets of them, some of the stocks that were IPOing in the beauty area. So I think what you've got now, much more of a focus on picking stocks at this stage in the cycle.
Being active going to be more important, looks like, at this time anyway. Well, we'll bring you full coverage, though, of the events from Jackson Hole. That's coming up, of course, later this week. It does start on Thursday, so do tune in right here on CNBC.
Media executive Edgar Bonfman has submitted a $4.3 billion bid for National Amusements, the holding company that controls Paramount, according to multiple reports. The offer is the latest saga in what has been long running after Skydance struck a deal to buy out shareholders last month. However, that agreement had a 45-day go-shop provision that allowed Paramount to solicit other offers. That period ends tomorrow. Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to cnbc.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.